Parag Thakkar, Head of Fund Management at Fort Capital, with us in our studios. Parag, bhai, great having you. Thanks for joining in. We are no longer at 22,500.
Absolutely.
Nearly 25. But all tensions behind us.
Correct.
Global and local.
Correct.
Is this the time to add on, or is the earnings delta not strong enough for you to put money to work?
So I would like to say that, see, as you very rightly said, and this is my my submission that at the lower levels I always remain more bullish. I always think of good things like India's macros are very strong. Oil is at below 65, and that's what we told last time, right, when the markets were down. Now, when the markets are up, you should remember the bad things. Right, and so but definitely you should be dynamic. And our, by the way, our fund's name is dynamic. So we stick to it, and so we'll be less bullish and, as you said, more selective. Like, for example, last time on our show I told cement is something I'm betting on big. That continues. And after Tata Steel, what they said, Tata Steel's interview, that Europe business will turn profitable. Tata Steel is something which we are already having and we might add on. So I would say that there are select pockets now. It is not that entire market is a buy. Of course, IT can see a good rebound because now the worries around US recession are receding because of this US-China trade deal going through. So I would say that IT, and that is also where we have, for example, we have TCS, HCL Tech and Emphasis in our portfolio, and we are equal weight in IT now. Because the TCS, HCL Tech offers you 4% dividend yield. And if US is going to turn around and the recession's worry are going to ease, there can be some discretionary spending revival next year. So I would say that, as I said, cement, IT, metal.
And a lot of commodity bets, huh? Cement, metals, etc. Interesting.
But I would say
where there is a value. So banks were earlier, banks were earlier my top picks. In banks, I am very selective now. Because ultimately, looking at the inflation numbers they are coming, the rate cuts can be far more and faster enough than what we think. And so if RBI does not support it with OMOs and does not provide enough liquidity into the system, so then banks are in the soup, because then banks' margins can take a hit with every rate cut which happens.
No, so I was just commenting on the point that you made when everything is time to turn bearish. But it's been barely a few days. Let's enjoy this for a little more time.
Not bearish. I'm not saying I'm bearish. See, with a country like India, where you have so strong macros, you cannot be structurally bearish.
No.
I'm bullish. So 90% of the portfolio is invested.
So let's come to the sections or the stock sectors that you think are now overheated. So, for example, PSUs, defense for one, rail. Do you think that story, it's time to get out of it and stop that celebration?
Yeah, so we keep on booking profits when we feel that there is a euphoria, there is too much of recency effect in the market. Because of this India-Pakistan war, again, some themes are getting reignited. So we have to take advantage of such situations when market wants to buy them, grab them at any price, and we give it to the market.
What are your top exit calls right now?
So see, because again, stock by stock in my fund, I cannot discuss it. But as but thematically, yes, I would book some profits into defense and railways in this massive rally which is going on.
And not cement, despite
the
run-up?
Yeah, cement I am structurally bullish because, see, I'll tell you, something which is at the bottom of this earning cycle. For example, as I told you last time, December, Q2 and Q3 were worst for cement. Yeah. Right? Because government was not spending, RBI was very tight, and all those situations have changed. And entire industry, if you look at commentary of Ultratech, if you look at commentary of Ambuja, if you look at commentary of Shree Cement, entire industry is bracing for higher profits now because they have seen that 5 years their profits have not gone anywhere. Right? And as I said, if you set up a new plant, it costs you $80 a ton. So you have to make at least 800 rupees per ton EBITDA.
Yeah.
So basically the entire, and see the results of Nuvoco Vistas and Birlacom. Luckily I own both the stocks. They have reduced debt out of their internal accruals when 9 months were very bad. In just last quarter, Nuvoco has reduced debt by 390 crores. Birlacom reduced debt by 800 crores. Right? Now, just to extend that point, in those markets, the demand is good. In April, May also, in East, the prices have gone up by another 10 to 12 rupees per bag. Nuvoco sells 75% of its cement in Eastern market. right? So, and see the discipline in the industry about improving profits and reducing debt before going for a big capex. So, Birla Corp also announced a capex, which is a very competitive capex, $73 per ton, 7.5 million tons at 4,300 crores. And before that, they reduced debt by 800 crores. So, they brought balance sheet into Nuvoco also, reduced debt, brought it down to below 4,000 crore from 6,300 crores.
So,
And now
you said you were lucky to have it because it's run up very quickly. I'm assuming that you're going to wait for a little while before adding more?
Yeah, those kind of tactical calls we cannot discuss and that's why I keep saying that just don't blindly follow what I say in the here, because at the fund level you have to manage it dynamically.
Of course.
Because there we have to take care of our investors.
Just because Parag Bhai is kind enough to speak more openly than most fund managers, and we always appreciate, doesn't mean you don't do your own
and so
homework.
put a disclaimer again. Don't follow my advice if you are doing a daily trade, intraday or something. It's take your advice of your financial advisor before taking a call. These are just 2-3 year views. If it plays out early, I'm happy to sell at a profit.
Be dynamic if you are following dynamic.
Oh, God.
Amardev Singh, Senior Vice President Research at Angel One with us as well. Amar, great having you. Thanks for joining in. How are you approaching trade, Amar, this morning?
Yeah, very good morning, and thank you for having me on the show. So we've been bullish on the benchmark indices, and because the way the markets have bounced back very sharply, and also across sectors, we've seen this happening, and across multi-caps as well. So I think from that perspective, and if you look at the trend on the charts, that also has been positive. What we are seeing is definitely at higher levels, 24,800, 25,000. That's going to act as a zone of resistance for Nifty, because if we see the move has been very fast from 8th of April. So we've seen that very fast move of almost 13-14% from those levels. So we are bullish on the market, and any pullback is a buying opportunity. As far as Nifty is concerned, we see that 24,400. 500, that should act as a zone of support. So any pullback towards those levels is a buying opportunity. Upside 24,800, 25,000 is a zone of resistance. On the talking about Bank Nifty, we are seeing some sort of weakness. Earlier it was Bank Nifty which was outperforming. Now we are seeing some sort of selling pressure on the daily charts, which is restricting Bank Nifty from trading above the 55,200 levels, which would act as a zone of resistance. Whereas on the downside, Bank Nifty is strongly supported around the 54,300, 400 zone. So it's more of a trading play with a positive bias, no doubt, with Nifty being stronger as compared to Bank Nifty as of now.
Okay, Amar, let's get your picks very quickly.
Yeah, sure. So the first stock is NBCC. This we've seen some very sharp move in this week itself. It's up almost 15-16%. So this is one stock one can look at buying at the current levels or any dip towards 105 with a stop loss of 97 and an upside target of 123. And the second is Mahindra and Mahindra Finance. So what we've seen that this stock has made a very strong bottom, and the stock is inching higher. So currently it's around 259, 260 levels. So any pullback towards 255, 256 is a buying opportunity with an upside target of 283. And a stop loss of 234.
Okay, since we are on expiry day, Amar, what would be your strategy?
So I would say that I would be more on the buying side. So I would like to rather go for a bull call spread, provided we see some correction in the Nifty towards 24,600 odd levels, 50-60 points correction. From there, we could witness a bounce back. So one can look at a bull call spread. Would be a better option.
Okay. I believe that we've got, so Neeraj just pointed out, we've all pointed out, there's so many stocks to look at this morning. We've addressed a few. Let's go straight across to some of them, actually. And we've got several small cap howlers to talk about this morning. Among them, Sheela Foam. There is, in fact, the margins which have come in at 3.9% versus 9.5%, and the PAT as a result has fallen as much as 66%. Watch out for this in trade. ADF Foods, here as well, there's an underperformance on the EBITDA front. It's down about 28%. The PAT is lower by as much as 36%. Indian Hume Pipes, the revenue has declined by as much as 3%, and here too there's a contraction in margins. It's coming at 15% compared with 18.9%. RACL Geartech as well, and
That's
here
the reversal. So that's not a howler because independent of the results, Malabar India Fund has, so let's remove that small cap howler topic from RACL Geartech because
it's not relevant.
Buying by Malabar India Fund makes it a really interesting one.
Interesting. Parag, you want to comment on any of these? Do you have coverage on any of these?
No. So I would not like to comment because we don't own the stocks in the portfolio.
Okay. I do want to ask you about another stock though. Hitachi Energy, it was something that I looked at very closely yesterday, and the numbers seem very good. In fact, that order wins number in the third quarter was very, very good. In the fourth quarter is up over 50% year on year. They're ending the year with order book of 19,000 plus crore rupees. What do you make of it? Is it too expensive?
Yeah, so basically all cap good stocks I feel, especially MNC ones, are very, very expensive. So I would say that that is one. But I saw, and again I don't hold it, but Tata Power results looked interesting to me because their Orissa Discom has shown a fantastic profit, and that they acquired when the stock price was 85, and now stock price is of course 400, but I think that has played out very well for them. And so this Discom buying Discoms and turning them profitable has become Tata Power's mastery, I would say. So I would watch out for it. I think it was an interesting result. So and as I said, I remain bullish on power generators at a good price because it's a
But generators, you don't like the ancillary companies.
Ancillary companies, wherever I see value in terms of good valuation,
Where do you
definitely.
see value?
So right
Don't
now,
give the names, but
no,
at
no.
least
But
the
I'm
themes.
saying not much.
Wind
Everything is very
equipment,
expensive actually.
T&D, transformers, no, nothing.
So I'm saying,
Everything is
I'm not saying the valuations don't offer too much of comfort.
There's a lot of interest in the space. You're saying that it's a little oversaturated.
Yeah, correct.
Okay.
Okay, so another set of, not stock specific, but I think an important story that we should address, and Alex, this is something that you've been digging up on. A lot of screaming headlines that, X number of SIPs have been cancelled in the month of April. And why that's important is because it gives an inference as if there is a big panic among retail investors. But your digging has found quite another reason.
No, absolutely. And this has to do with a regulation change from last year. Starting April 2024, SEBI directed mutual funds to tag SIP accounts or SIP folios that had been paused for 3 successive installations as cancelled. Now, this is important because in April of last year, they started doing this prospectively. There was a headline, there were a few headlines that talked about a 300% SIP cancellation in the month of April, and this is misleading. Understand why. First of all, a SIP cancellation is, and this ratio is basically cancelled SIPs as a percentage of new SIPs that have been added during the month, right? So what has Amphi said? I spoke with them yesterday. They've said that they've undertaken a one-time cleanup of their SIP book in April. And what has happened is that before April of 2024, there were several legacy accounts that were not prospectively cleaned up at that time, and that number stood at 1.62 crore. And so that big chunk of dormant SIP folios was taken out in the month of April. And so as of the 14th of May, in the latest update, the total SIP number stands at 8.89 crore rupees, and that is down from 10.05 crore rupees at the end of March. The contributing SIPs, and this is where this is very important for you to understand, you see that gross SIP flow number, and that's at about 26,000 crore rupees. It hit a record high in April. The contributing SIPs at 8.38 crore is simply the number of SIPs that have contributed to that gross number. So that really is a number for you to pay attention to. Now, why is this important? On a net basis, the number of folios have actually gone up in the month of April by 27 lakh from 8.11 crore in the month of March. What AMFI has said is that this is a one-time cleanup. It's done now. And so on an ongoing basis, assuming that the equity markets now go up as they have done in the recent past, and there are no new changes and focus is on earnings and several other things, that domestic flow and through retail investors, through SIPs, will continue.
So I think that's an important clarification to make, that there is no big trouble as far as SIPs are concerned. But we have so much to cover this morning, so let's get through it as fast as we can, because we're aiming to give you the maximum information before markets open. HAL is one that we want to focus on. Of course, numbers came in yesterday, but a lot of brokerages notes this morning. Nomura has retained a buy. JP Morgan maintains overweight as well. Anushi, what are brokerages saying about Hindustan Aeronautics?
Hey, morning, Tamanna. I'll start off with JP Morgan first. Now, they've maintained an overweight rating on the stock, and this is with a target price of 5,040 that we are looking at. Fourth quarter result. Now, this was a beat that they're seeing in terms of where the EBITDA margins were concerned. Now, do note that the company came out with a margin of around 38.6% compared to 39.9% this year. So, the expectation for a margin contraction was higher. So, a beat on that is what we are looking at. Quarterly P&L can be volatile due to the nature of business in terms of where the order execution is concerned. So that's why it's important to consider a quarter-to-quarter basis scenario also for a company like Hindustan Aeronautics. Now, Nomura has a retained buy rating on the stock with a target price of 4,700, which is a 2% of an upside that we are looking at. A marginal beat in the top line is what they're seeing, with adjusted EBITDA ahead of expectations. Now, the company has a strong order book of 1.84 lakh crore. We saw about a 90% of an increase compared to last year. But it's the prospect pipeline which is interesting, of over 1.4 lakh crore. So this order book continues to give execution, gives execution growth visibility over the next 5-year period itself. Even in terms of where the balance sheet is standing, we saw a reduction in the net working capital days as well. Even in operating cash flow, there was an improvement of a jump of 66% that is seen. Stock currently trading at about 37 times basis on its FY26 earnings. Nomura maintains a buy call on this stock. So this is the overall view that we are seeing for HAL.
So HAL in focus. I'm sure you'll see some of that defense play today as well. I think Parag Thakkar's view is very interesting this morning, saying, time to exit if you've
not
sitting on huge profits.
Just to put a disclaimer, we have HAL in our portfolio.
You saw the numbers?
Yeah, numbers. See, basically, HAL, you cannot actually see numbers quarter on quarter. It's a 6-year order book, right? Correct. So when which order will get executed, the margins, revenues will depend on that. So it's a long-term view which you have to take and dynamically manage the position, because I was significantly overweight. So I would like to trim it at in this rally, because see, market will give you opportunity, right? Then again, there will be a sector rotation where this theme will fade away a little bit after this geopolitical tension eases out. That is the time you get in at a lower level. So
while we're on the topic, and I know you've spoken about defense per se, but I do want to ask about these shipbuilders, right? So Garden Reach, for example, yesterday 14.5% up, and the numbers were good. Nobody is denying that. But the question is that justified?
So basically, see, in defense, because this is a very high entry barrier business, right? If you even just to start your first supply into defense, it takes 2 to 3 years for you to get approvals and all. And so the business always deserved a higher multiple than it got. But in between, after COVID, definitely government's focus was on something else. It was not getting that attention. I remember Cochin Shipyard and Masgaon Dock were trading at 300, 350 rupees, and only legendary investors like Damaniji used to buy that stock at that time. Yeah. When the net cash in the company was 30% of the market cap and PEs were 10, 12. So I've seen those times. So now to see them at 25, 30 times, it looks a little bit. So it's I would say, individual issue that you have seen something at 350. Now you cannot buy at 3,500.
I think you'll admit also that maybe it goes to 45 times also,
I
right?
admit that.
Parag, it may go to 45 times also, but you can't buy.
Because what I see is that HAL is one stock where there is a huge entry barrier, right? Because what it makes, nobody else can make. So at 37 times FY26 or 31 times FY27, I don't find it too grossly expensive. And with a 6-year order book, with all the chances of order book further improving. But rest of the stocks, we have seen them trading at such a low prices like Garden, all this. Cochin Shipyard or Mazgaon Dock.
So there are some winners in this space, and there are some
100%.
who are just riding the bandwagon. I
Yeah,
suppose sifting between the two is. I just wonder if you saw Jubilant this morning. I mean, yesterday's numbers.
So basically, there are so many results that it is very difficult to look at all the results.
I agree completely. But you know, just in that consumption QSR theme, there was Jubilant. I think there was Westlife as well.
Yeah.
But you know, any views over there at all?
So basically, it is just that the overall entire consumption space has suffered in last 1.5 to 2 years, right? In India, nobody is able to show great growth. Jubilant, of course, has done well. Westlife has done little bit better than others, I would say. But there is no big growth as such, and the multiples look very stretched right now, as of now. But of course, these are long-term growth areas in India where the
burgers and pizzas are not going to go out of fashion.
yeah. So at some point, it will look interesting. But today, I feel the valuations are far stretched for the growth, which is actually looking in short term. The growth is not looking that great.
Actually, so Amar, would you want to come in on levels for any of these? So one is Jubilant Foodworks, of course. It may start off maybe, I mean, if the brokerages are to be believed, marginally higher, but there is also this overhang of Turkey, part one. But also, if we haven't spoken to you about specifically the shipbuilding names, because those were the big movers, right? Garden Reach Shipbuilders, Cochin Shipyard, and HAL. I'm adding HAL to that list. So these four names.
Yeah, so Jubilant Foodworks, I would say it's more or less clearly indicating some sort of consolidation, and the trend, though the long-term trend is positive, but intermediate we are seeing some sort of consolidation because it's unable to breach the 720, 730 on the upside. Whereas on the downside, it's strongly supported around the 640, 650 zone. So I would say it's more of a range play, but with a positive bias. Talking about the other stocks which you mentioned, I'll first talk about HAL. See, HAL is very strong on the charts. So the correction which the stock had witnessed from almost 5,600 levels to 3,000, that was definitely a very good buying opportunity. And looking at the structure of the chart as of today on the intermediate term basis or the long term basis, that continues to remain positive. And what we've seen is that the stock has taken out its previous top, which it had made in the second week of December. That was somewhere around 40, current levels only, 4,700, 4,750. So sustaining above 4,800 is something which is very important. Then the stock could inch higher towards the 5,000 mark. And looking at the other stocks which you mentioned, Cochin Shipyard, if I talk about. So Cochin Shipyard is also broken out of a resistance zone. Earlier, it was unable to breach the 1,500 levels. So it's taken that out, but it needs to sustain above the 1750 for any further upside meaningful rally towards 2,000 mark. And lastly, to talk about Garden Reach, which you mentioned. See, this stock is stronger on the charts as compared to Cochin Shipyard on different time frames. So I would say, and it has breached its resistance or the tops which it had made in December. So this is one stock one can definitely look at initiating an entry, but not at the current levels, because the stock has got good support coming on the 2,000, 2,050 levels. But the upside for the stock has a potential towards 2350 levels in the short term.
Got it. Okay, Amar, we'll leave it at that. Thanks much for taking the time out and being with us today on the show and giving your insights. Now, the other bucket to watch out for could be pharmaceuticals, because there are 2 or 3 names which are in news today because of results. Lupin, steady set of numbers, good margin expansion. Could it react positively remains to be seen. Piramal was a bit of a howler, and considering what CDMO companies have done, Piramal didn't quite perform well. So maybe Piramal Pharma sees a downtick. And then Blue Jet, which came out with numbers yesterday. But the analysis of the numbers, and by the way, viewers, we'll talk to the management today. It's an interview you don't want to miss because the numbers were very, very strong. Now, Parag bhai, do you track any of these? Any view on the CDMO space? Because that seems to be working for almost all companies.
Sure. So basically, Lupin, as you said, a steady set of numbers. I think the numbers were in line. And another 2-3 quarters, you will see good numbers from Lupin, in my view, because that's what I have understood, that some of the products which are getting approvals will get operationalized, and so the numbers will remain good, at least for this year. It looks to be a decent this thing. And of course, now that the worry around entire pharma space is also, I would say, taking a back seat little bit, because the Trump's order which came out was not that risky, was not that negative. And it is for innovators to reduce the prices and not the generic ones. Of course, there will be some rub-off impact on generics. Coming to CDMO, of course, the China plus one theme remains. India's capability in that space is fantastic. Up till now, we have saw good results from, as you rightly said, Blue Jet, a very good result. I saw a result of Sai Life Science, which was decent enough. Of course, the EVs will report again a fantastic number, but Piramal was muted. So I would say that, and this is my view for the entire market. I would like to extend this to the entire market. Now at closer to 25,000 Nifty, you have to see it bottom up, company specific. See, most of the macro worries are behind.
Yeah.
Most of the geopolitical worries are hopefully behind.
For now.
For now. So now, and that is being factored by market also.
Correct.
At 25,000, right? So now it is company specific, bottom up. You cannot take a blanket view that it's a buy market. Yeah. You cannot take a blanket view on any particular sector. It's a blanket buy. Even in cement, for example, I would be selective. Right, because in some stocks the entire this price increase thing has been priced in. So that's why I was coming to, for example, Nuvoco, where the stock is at replacement cost. So stock has not done well anything, not done well actually, because of some selling by some institutions. So I would say that these are the stocks where there is an earning trajectory. This quarter they generated 390 crore cash profit.
Yep.
And market cap is 12,500 crores. And they repaid the debt of 390 crores. So I'm saying that, you have to be stock specific in each sector and across the market.
Parag bhai, before we let you go, result season, 35, 36 Nifty companies out, but non-Nifty, Nifty milake, in a nutshell, which are the set of results that impressed you the most?
So I would say my favorite remains cement, of course, because cement is where you saw March quarter always is good seasonally, but this time you are seeing a price action also in terms of increase in the prices, which has happened in north in March quarter, and in April, May, June it is happening in south. If you have seen Sagar Cement's call, the results were bad, but they said that there is a significant price improvement in south. So the stock did not fall. So as I said on the last call, Ramco and India Cement will be benefiting from the south price hikes in June quarter. Plus they are also reducing debt. Yeah. So I would say that one is that Tata Steel's call was very interesting, that Europe in Q1 FY26 itself they are expecting a turnaround. And amongst the companies which I don't own, of course I saw a result of Tilak Nagar yesterday. The result and the commentary both were very, very good. I would say that, of course, I don't own that in the portfolio, but I would say that these, because as we are discussing.
Parag bhai, just a quick view on this, right? Berger Paints, better than expected, but still there's a pall of gloom, if you can call it that, in the paint space overall.
Absolutely.
What are you watching specifically?
So paints, as I told, paints is a space from last 2-3 years since Grasim announced its plan to enter, and Birla Opus is now clearly visible everywhere. So I don't have a very bullish view on paint industry. Of course, when there will be a price point which will attract us, we will have a look at it. But right now, there's an increased competition in the space, so the margins for the entire industry will go down. Plus, overall demand scenario, as I said, from last 15 to 18 months, we are not seeing a very big consumption boom in India, right? So from demand perspective also, I have not seen paint industry growing in single digits or those kind of things in my life, I would say. So, so some of the spaces where the size of opportunity appears to be very, very big, right? Retail, you saw D-Mart's number, right? Avenue Supermart's number. Fantastically run company, but profit growth was hardly anything. Yeah. So I would say that even if you saw Swiggy's numbers, right? The 1,000 crore loss in a quarter. Correct. So I would say that this entire consumption boom is not happening. And so why to pay 40-50 times for that, for some of the, and especially in paint where there is a huge competition.
Yep. Good question. Okay. Fair call. Parag bhai, thanks so much for joining in and giving us your perspective. Really appreciate your time.
Thanks.